Alrighty, traders. Alrighty. So let's get actually into today's market update. The actual stock market, very, very volatile day. We had a very big sort of swing, very big swinging sort of motion, up and down, closed higher. What do I actually see happening right now? Are we forming a bit of a bottom? What do I actually see happening moving forward in the stock market? And also the mining stocks actually captured a little bit of a bit. You've got a bit of a green across the mining sector as well. And the looking at the look at this here. This is the energy sector, and this energy sector was just like gangbusters movement to the upside. So I've got a lot of things I want to share with you. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So let's get straight into it. I am just having the best, most incredible, what an incredible month it's been. I took a trade last night on the market, on the US market open, on the futures market. It was what I call a short-term cash flow trade. Nice, successful trade. This month has been, in considering the volatility we've had, it's been one incredible, successful month for me. I haven't taken a lot of trades, maybe 7 or 8 trades in total. And now some of those trades, like last minute, it lasted 5 minutes, right? But it's a short-term cash flow trade. So it's been such an incredible month for there. So if you are going through a hard time right now, traders, then I got something special for you, and I'm running a bit of a thank you for being my subscriber sale and a bit of a celebration that I'm just having an incredible successful month, and I'm running a bit of a thank you for being my subscriber sale. Here's the deal. I am going to be giving the first 10 people to email me on the email address below, or Howell, Howell, trader at gmail.com, howtrader@gmail.com, my last name, trader at gmail.com, or there should be a link in the description there. The first 10 people get 95% off my entire Master Trader collection. This is over 20 hours of the things that make a big difference to my foundations, to my chart reading, to the advanced chart reading, to 4 powerful trading systems, to the mindset, and so much more. Bullseye, 10 months, so much. There's over 20 hours of amazing, and I'm running a 95% off. Thank you for being my subscriber sale. So the very first 10 people get it. So very first 10 people to email me with the link below. Anyway, so let's have a look at through here. And based off what I was actually saying before, too, traders, if you're having a hard time right now, one of the big things about the actual stock market is that it doesn't reward patience. Okay. As I said before, that I haven't actually had a lot of trades this month, and some of the trades have only been very, very, very short term. And that's the way you need, it's especially right now, it's so important to have what I call a sniper approach, where I do these market updates for you. Okay. So we do these market updates, and I actually did a market update right here. And if you guys go check back, I did a video here, and man, look, look at the arrow starting to go crazy. Look at this here. So I did a video here, and I said this is do or die. We either break up and we have a big move up, or we roll over. If we roll over, then it's probably going to die. And then, as you can see, we've had a big move down through here. So there's a lot of volatility, a lot of movement in the markets, but it's so important to have that sniper approach. And if there's a trade where you're going to get into, and it's just not right for you, don't take it, okay? It's not worth it. I'll give you an example. There was a trade, I traded the US market open last night, and I took the trade. In fact, let me actually just show you that trade. And that way you can actually learn from what I was actually looking at. Let me go through to here, and let me bring up the trading view, because I was on the futures market. So on the ES futures, what a volatile movement on the futures here. And the reason why I'm showing you this trade here, traders, because I want to just share with you some things that I look at, which are very, 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 very powerful in the markets here. So we've got 4 screens here. Let's actually go down to 2 screens. Okay, we'll go side by side. We'll make the chart to the left the 1 hour chart. Actually, you know what? Let's just make it the 15-minute chart. Let's just make this the 15-minute chart here for a minute. Okay. This is the 15-minute chart. Let's actually bring up where we are here. Okay. Actually, no, we'll forget that there. Okay. So one thing I was looking at here was I always, if you guys know anything about me, there's power in the higher time frame. Okay. There is power in the higher time frame. And in that 95% off sale that I'm running for the first 10 people, I have a whole complete section there about the chart reading mastery. But in the advanced chart reading section, I talk a lot about the advanced stuff that really supercharges your success in the markets big time. And one of those things is combining two time frames. And if you've been watching me now for quite some time, you know that I'm always big on, if I'm trading the daily chart, I'm looking at the higher time frame, the weekly chart, for the trend, to see where the trend is at that time. So what I was looking at, and let's actually go down to here. Let's actually bring up. So I was looking at the left chart, was the 15-minute chart. This is when the US market opened. All right, so I'm going to bring it down to the time that I actually entered, and this now I'm going to bring up, and it was on the 5-minute chart. And it actually wasn't, again, it was a very, very, very short term, what I call a short term cash flow trade, which is very, 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 very powerful. So as you can see, look at this here. So what I was looking at is that this point right here, let me actually bring up the arrow let me actually put on an arrow where I entered. And again, I really want to share this with you because it's very, very, very powerful to combine both time frames. And you can start to look at trades like this here. So, the first thing I'm looking for in a good quality setup is I'm just making sure that I'm trading with some trend. You know what I mean? So I noticed we had a high up here. Let me actually minimize that there. So we had a high up there, and we also had a lower high here. And then the market broke down. And so when I was looking at this, here, I could see that we had a high, then we had a low, then we had a lower high. And look what happened here. It's very, 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 very powerful. Check this out. This is you will start to notice this a lot, traders. Okay, now here's what I'm about to talk about here. There is patterns where the market may go sideways for a bit like this, and then suddenly it drops down, and then has a little bit of sideways, and then has a big breakdown bar like that. If you get setups like that, it's super powerful. Massive high probability it's going to run into your favor, at least for a short-term move, right? Because there's two types of trades that I take. There's what I call the short-term cash flow trade, and then there's the wealth builder trade. The short-term cash flow trade, I'm in and out literally within 5 minutes. That's exactly what happened over here, right? Over here. I was in and out very, very quickly. And then the wealth builder trades, where sometimes these trades can generate 500 to 1,000% return. And they happen sometimes over many hours if I'm trading the shorter term, or many weeks if I'm trading the daily charts. But anyway, you can see here, right, that when the markets go sideways and then we drop a lower low, and then it just builds up and it goes sideways, right? So it looks like this, sideways really, and then we drop, and then we just very, 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 very weak, and then we get a strong bar breaking down. Oh my goodness, this pattern here, traders, is super duper powerful. At least for what I call a short-term trade, right? Because that's what we're after. We are after high probability in the markets, right? High probability in the markets. And there's a high probability we may do something like that, a little bit of rally up, right? And then a boom, straight back down. So when I was looking at this, I was actually seeing this exact pattern that I'm talking about to you. Let's actually bring this over here. Let me actually just share this with you. Can I do this with the actual chart with the lines? So can I bring this over for a bit? Can I move this over? I can't, can I? No. All right. So anyway, let me actually bring up, where are you? Arrow, right? So right here, right there, this is what I was looking at, right? So I was looking at this point through here. Now, as I said before, it's pretty powerful when you get this type of move. Let me just, I'll open up this chart a bit more here for you. But as you can see here, look what's happening here. Okay, we had a high, we had a low. Look what happened here. We dropped down to a lower low. We had a slight rise up, and then we rejected there. Then we actually started to come back down. And I knew that at least for a short-term basis, we're going to get a follow-through on the downside. Why? Because it's this lower low, lower high. It happens. It's actually happened so many times, traders, in the markets. It even happened on gold. It happened on gold yesterday as well too. I didn't actually trade the gold because I actually missed that trade. I wasn't actually looking at gold, but it actually happened on gold on the 2-minute chart. yesterday afternoon, my time that is, okay? So we had a big drop down through there. So I knew, again, just firstly, what am I looking for? I'm looking for trend analysis, right? I'm looking for trend. Where is the trend on that higher time frame? I'm trading the 5-minute chart. I'm looking at the 15-minute chart for the higher time frame. Now, if I go and I open up this here, you'll be able to see, look at this here. All right, you know what? Let me actually just blow up one. I'll blow up just the one chart here for a minute so you can actually see what I'm looking at here. Again, guys, I didn't expect this to be a big strong move because the trend on that higher time frame wasn't strong, right? We just had it was downtrending, but it wasn't a strong downtrend. So it was what I call a short-term trade. So let me actually bring this up here. And then I saw, looking at this here, let me take off the 20 because I like to use the 52. Look what happened here, right? It's such an incredible, powerful setup here. So I was looking at, once again, I was watching this on the open. This is when the futures market, when the US market opened, right? And I'm like, okay, here we go. We have a high up here. We have sort of a low down the bottom here. Look what happened here. We dropped down to what? We dropped down to a low. Notice how when we actually pulled up, when we started to go here, we started to go sideways, and see, it was very weak. It wasn't strong, right? We didn't get a big strong move up like that. We had a very weak pullback. That means that, oh my goodness, that the sellers are losing strength through here. And then again, these first 5 minutes, this is when the market opened. Then look what happened. Look at my moving average. The moving averages also measures momentum, right? So look at this here. And then the momentum started to really kick down. So I had the 15-minute chart trend in place. And then I had this chart where it ripped a lower low, slight pullback. Then guess what I was looking for? I'm looking for a good break below this level here. So I'm looking for a good strong breakdown. Once I get that, then I'm in. And again, because we didn't have a good strong trending chart on that 15-minute chart, it was actually, as you can see, it's downtrending, but it's not really strong trending. It's what I call a short-term cash flow trade. And so what happened here is then the next 5 minutes did exactly that, as you can see, right? And you can see here, once again, we had this low, we ripped the lower low, and then as it pulled back, notice how weak it was, and then the moving average coming down, and then we broke down. So it's, once again, traders, let me just repeat this again so you guys got this, so you can actually keep an eye out for this pattern because it works wonders. If the market's going sideways like this, okay, and then it breaks down like so, and then it breaks down like that there, it just breaks down a little bit, and then we start to do something like this, and then we rip a large bar, right? It has to be a large bar. It's breaking down, so we have a lower low. So we have a lower low, lower high, but this here has to be a pullback with small bars. And then this here needs to be a large bar to say, okay, now we're likely to continue. So I got into there, and literally the very next bar, I was out. Now, traders, that doesn't look like much. Okay, that doesn't look like much, but let me show you an example of what I'm talking about here. When you start to increase your position size and increase your your risk in the markets, because you can, if that there was a $10,000 risk, right? So if I enter at the close of this bar here, right? So let me just do this here. If that there was a $10,000 risk, this, I do a lot more than that, but if it was a $10,000 risk here, okay, just say you're comfortable taking a $10,000 risk in the markets because you know it has a high probability, then do you know that $10,000 risk, the very next bar where it closed, that's going to give you at least a $3,000 or $4,000 profit really quickly? How many of those trades? Now, for me personally, I have a lot more risk on that. Again, if you can start to really increase your risk overall, right? Now, you start small, right? You might have $1,000 risk per trade, and there's a quick $300 or $400 profit. You take 2 of those per week, you're making close to $1,000. You know what I'm trying to say, right? So that's the point I'm trying to say here, is that this is all it was. But again, if you start to increase your position sizes where you're most confident, a $20,000 risk here is going to give you anywhere between a $6,000 to $10,000 profit in literally 5 minutes, right? And then as you can see, then it completely reversed. And so that's exactly what I was expecting out of it. I didn't expect it to be quite a strong move. So anyway, I just wanted to share that with you there, traders. As you can see, it's definitely something that's absolutely massive. And again, more based off that trading approach, guys, is in that 95% of sale for the first 10 people to email me. And then I have a step-by-step video walking you through all that trading pattern as well too. So, and plus there's other 3 or 4 different trading systems in there you got to get for the first 10 people. So back to the actual stock market. What we're actually looking at the stock market right now is we're looking at the market actually pulling back through here. And this, traders, I'm saying it right now, this is not the top. It's not what you think. Okay, this is not the top of the markets. No, it is not the top of the markets. We are getting a correction in the markets. And this happens at least once a year, traders, okay? Once a year, we go through a bit of a 10, sometimes even more, right? Sometimes even a 15 or so % pullback. But most corrections are anywhere between that 8 to maybe 12% range. Now, sometimes a bit longer, right? Sometimes you're going to get a much more of a deeper pullback. But we get this at least once a year, okay? We are nowhere near the top in the markets. We are not there, traders, okay? And the reason why I say that is this. Firstly, is where are we in the market cycle? Let me actually bring up a few things here, all right? So the first thing here is the market cycle, okay? The market cycle, let me actually bring this up here, is we are nowhere near the top based off these market cycles. This entire rally, so see this market cycle, we did have what do we have here? We had the big COVID crash, right? The big COVID crash, okay? And then guess what? And then suddenly the market actually had a rally up. This is the rally, I believe, where we're here. So this disbelief here is probably over here. I believe we are still here right now. Like there's throughout this entire rally we've had over all last year, there was so much negative. Like this is so much negative. You don't get negative at tops. Just look at what was happening in the cryptocurrencies and the Bitcoin over the last 12 months, right? What was happening all of last year of cryptocurrencies? Oh, I've made $1 million. It's gonna go to it. Oh, I've made $1 million. It's gonna go to $1 million. I'm all in Bitcoin, cryptocurrency, shit coins. Can you believe that there's 17,000 coins out there right now? I just recently heard. That sounds like a tech. I tell you what, that is so like the tech boom days, right? The tech boom days. Guess what? Everyone was then a tech company, and then the market crashed, and then like literally 95% of them went away. That's exactly what's going to happen to shit coins. Anyway, I'm not saying it's going to happen to Bitcoin for you Bitcoin lovers, like for you guys that actually, you know, you put a ring on it. you married to Bitcoin because that's your whole sole focus. No, me, what am I doing, traders? I just love trading the markets, right? So where we are right now in the cycle of things in this big picture here is that in this drop we're here right now, traders, this is not the top, okay? This is not the top. We have a massive probability that by the year end, we are screaming up to an all-time new high and racing up to probably 5,500 on the S&P. Now, when I say 5,500, actually probably even 6,000. But you know, at least right now we're down at 4,300, right? We got down almost 4,200. There's a massive probability we're going to be doing 5,500 plus more by the end of the year. 5,500, maybe even 6,000 on the S&P by the end of the year. Okay. Now that doesn't mean we're not going to get more of a drop down, especially when we've got the good old poo pow doing his talky thing. But we'll see what happens with that, okay? Now I'm going to get to a minute more about the actual poo pow. And so firstly, we're in the market cycle here. When we did not get here at all. We have not gotten here at all in the market cycle, and that's how the markets work, right? Where do we get that was the cryptocurrency. That's why I traded the last 12 months. I have not invested in cryptos. All right? Why? Because I just saw we're at the top of the market, and I saw that there was better places for long-term buy and hold if I was looking to invest, right? Than the cryptocurrencies, and so that's the reason why. That's again, I'm nothing against the cryptocurrencies, and then I'm so happy that I listened to the herd, right? Because the herd was, look at that. What's that symbol there? I just noticed that symbol. What's that called? That's called the I know the Wall Street cheat sheet. So, and that's the reason why I didn't do anything with the cryptocurrencies, because I'm just like, this is just, there's too much there. Okay. There's way too much. And so traders, the market is a counterintuitive thing. And that's why it's so hard for most traders who are trading these markets to do well if you're looking to invest in it, right? Because when most people are greedy, you need to be fearful. And that's the reason why the last 12 months, so many people are jumping all over the whole cryptocurrencies. Me, I'm just like, ugh. Where do you want to be investing? You want to be investing down here, right? Or down when there is massive panic. When there is massive what? Panic, a capitulation type of move. That's when you want to be investing. Now, you might not get the bottom because you might buy it here, right? And then it spends another week or two going down, and then 6 months it's doing that. Make sense? So that's the first thing I do see. Okay, we got look at this on the S&P 500. We've got the Nasdaq as well too, all bouncing off my targets here. Okay, there we've got a bit of a channel there. Whoopie doo. So we have the market bouncing off this support level. Same for the Dow Jones as well too. The Dow Jones actually had look at the volatility in the Dow Jones. Wow, we had a bit of volatility there. Now, also, let's actually bring this back here. Okay, looking at the markets. So let's actually go to the Dow Jones and let's actually I'll talk about this here for a minute, okay? Because a lot of people say, "Oh, this is the biggest bubble in history." Really? Okay, well, when I'm looking at the biggest bubble in history, where does your eye automatically go to on this chart? Where's the biggest bubble? It has to be this point through here, right? That is what? The roaring 20s. Now, here's the thing. When interest rates are going up, initially, the market is going up as well too. It happened even when Trump got elected, right? And let's actually let's actually do that here. So we'll go to let's go back to when Trump got elected. When did they start raising interest rates? They rose the interest rates once in 2016 and then they stopped. But then in 2017, as the market was going up, they rose it here, rose, and they kept raising the interest rates. And then guess what? Then after about 12 months of consecutive rising in the rates, that's when we started to hit a bit of a sticking point in the markets. With me so far? So as they are raising interest rates, the market is going up, and then it's roughly, if you read Ray Dalio stuff, right? If you guys haven't got Ray Dalio, Big Debt Crises, he talks a lot about this, and I learned a lot of this from him, and that is the Ray Dalio Big Debt Crises, and it goes back through all the big crises, and we can even go back to the 1929 period. All right, look at this here. When did they start raising interest rates? In 1929. See this big, look at this here. Look at this here. So if we're going back to this 1929 period, like, look at this. Like, we think, oh, this is such the biggest bull market in blah, 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 right? It's like, nah. I believe right now we are here. I believe we are here, and I believe we're going to be experiencing this here in the stock market now. Oh, John, you have no idea what you're talking about. Okay. So let's have a look at this here. As the market rose, when did they really start to increase the interest rates? Interesting. It was when? The start of 2018. Oh, sorry, 2018. 2018 was what's the word for it? That flu thing, right? Yeah. Anyway, so it was 1928. 1928 is when they started to raise interest rates. And so they started to raise it, look at this here, and they rose it and rose and rose and rose and rose. And then eventually what? And then eventually it got to a point, roughly one year. This actually took around one and a half years, maybe a bit longer. But they started to really raise interest rates in 1928. And as you can see, as they start to raise it, we know we're getting towards the end of the bull market. But we are roughly 12 months, depending if they go, oh, we're going to go quarter base point here. And then another 3 months, we're going to go through another quarter base point here. Especially if they do that. Yeah, we have a long way to go, traders, before the market actually starts to get to that pressure point. And then yes, we are going to see one of the biggest mock charge pullbacks in the markets. And then guess what? We're going to come out with the biggest stimulus package we've ever done in history. Which each one, the 08 package was, I forget exactly what it was, but then we had the 2020 package, right? The 2020 package was bigger than this package here. The 2023 package is going to be bigger than this one here, right? Which is, it's, you know, you think the printing press is big now and all that sort of stuff. You wait till you see the next stimulus package. They are going to print this currency into oblivion, and guess what? Don't let a good crisis go to waste. Okay, so that's what I'm looking at there with the actual stock market right now. And so if we have a look at the Dow Jones and the markets itself and what's going on, then that's the reason why I say on a short-term basis, traders, let's actually go to this chart here. On a short-term level, yeah, we may actually get a bit more downside to come, but to me there is so much more upside, and this is just a bit of a mock charge. And again, traders, this actually happened last year, right? And people don't realize it, but this actually happened last year. Look at this here, from this high point over here. This is in September. Actually, what was that pullback there? That pullback there was, look at that there. So that pullback there was from the high to low. That was in, actually we had 2 last year. Actually 3 last year. Look at this here. So from this high point to this low point over here. Let me just bring this chart over here so we can actually just get a look at it, right? So look at this here. It ran up, and look at this here. We had from the high down to the low. It was roughly 9%. That was a 9% pullback. And then we ran up, and then from this high down to low, guess what? Another 8 or 9%, maybe a bit more. There was actually roughly 10% on the S&P. And then we rallied up, and then we had another big pullback here of a 9 or 10%. But look at this here. They are just what? Corrections, pullbacks in the markets, and then away we go. Market has a poof, right? And then starts to have a big move up again. And now this is where we are right now. So to me, traders, this is not the top in the markets. This is what I call a slingshot move. I don't know exactly when the bottom is. We may even have a bottom right now. The market may even freak out tomorrow because of poo pow pow and do it when he does his talky thing. But traders, we are not at the top of the market, and it's not what you're thinking right now. Once again, traders, we are down. We are from here, and we are down right now from the high to low is a 12%. So this is actually a much bigger correction. But that's okay, traders, okay? We generally go through this once a year. You don't realize it, but roughly the similar amount of drop in the correction in the markets right now happened 3 times last year. But guess what happened? Every single time the market rose. You buy when people are fearful. You sell when people are greedy. So traders, I hope you enjoyed today's update. There's actually a lot of things I actually went through, so you may want to watch this video a few times. Once again, traders, the very first 10 people get access to my entire Master Trader collection. There's over 20 hours of everything that's made a big difference to the foundations of what goes into a good trader, to the chart reading stuff, to the advanced chart reading techniques as well. Amazing trading systems you can start to implement. There's 4 different ones you can choose from. You even got the mindset, the trade management, the bullseye techniques. It's what I call how to generate the X factor in a trader. There's so much in there. And the very first 10 people to email me at Hal, my last name, trader@gmail.com, or there should be the email there. The very first 10 people to email me get the 95% off. And this is actually just a bit of a say. This is a 95% off. Thank you for being my subscriber sale, but it's only for the very first 10 people only. And then that's it. So this is what I want you to do right now. Go right now. Email me right now at howtrader.com. Tell me that you're in, that you want the 95% off, and then I'll send you all the details. Speak to you soon, traders.